Pi Network just dumped over 1 million tokens. The price, it crashed from $3 to 20 cents in weeks. A community analyst is pointing fingers directly at the core team, accusing them of selling off their own supply just to keep the lights on. Meanwhile, exchanges are seeing massive outflows. KYC approvals are skyrocketing, and a descending triangle pattern is about to break. So what's really happening here? Are we watching a project implode, or is this the chaos before a major comeback? Let's break down the data, the drama, and what it means for your Pi holdings. Welcome back to the channel. If you're holding Pi or just love watching crypto chaos unfold in real time, you're in the right place. Smash that like button, hit subscribe, and turn on notifications because Pi Network updates come fast and furious, and you don't want to miss what happens next. Pi Network is having what we might politely call a moment. The community is in full meltdown mode after reports surfaced of 1.2 million Pi tokens being sold off. That's not pocket change, that's serious supply hitting the market, and when that much supply floods in, prices don't just dip, they nosedive. We're talking a collapse from $3 down to 20 cents in a matter of weeks. That's an over 93% drop, folks. Bitcoin maximalists would call that a scam coin death spiral. Pi supporters are scrambling for explanations. So, a prominent community analyst who goes by Mr. Spock, yeah, just like the Star Trek character, has publicly accused the Pi Network core team of being the ones dumping tokens. According to Spock, the devs are apparently selling Pi just to cover basic operational expenses because, and I quote, they don't have any other way to make ends meet. No commercial revenue, no functioning ecosystem generating cash flow, just a team allegedly forced to sell their own tokens to pay the bills. If that's true, it's not just bearish, that's a red flag the size of Texas. Calls for transparency are definitely growing louder. Pioneers want on-chain proof, they want a clear decentralization roadmap, and honestly, they want to know if their holdings are being systematically diluted by the very people who created the project. According to PiScan Data, centralized exchange wallets saw an outflow of over 1.32 million Pi tokens in the last 24 hours. Let me translate that for you. People are pulling Pi off exchanges. When tokens leave exchanges, it reduces available sell pressure. It suggests accumulation. It hints that despite the price carnage and community outrage, someone, or many someones, is actually buying Pi and moving it into cold storage. That's not the behavior of panic sellers. That's the behavior of strategic accumulators. Now, I'll give you my expert take here. Outflows during a price collapse are one of the most contrarian bullish signals you can get. It means smart money sees blood in the streets and is shopping while retail panics. Of course, we need to balance this against the fact that most Pi supply remains off exchange anyway. Pi Network's stringent know your business requirements for listings mean exchanges don't hold the majority of circulating supply. So while 1.32 million tokens leaving exchanges sounds impressive, it's a drop in the ocean compared to total supply dynamics. Here's another fascinating data point. Pi Network recorded large payment transactions of 999,999 Pi each, worth over $200,000 in the last 24 hours. These aren't random transfers. These are utility transactions, real-world usage, adoption signals. While everyone's screaming about the core team dumping, the network itself is processing significant value transfers. That tells me the ecosystem, however flawed, is still functioning. People are still using Pi for payments, which is literally the entire point of a cryptocurrency. Let's talk technicals because, honestly, the chart is setting up for something big. Pi Network is trading just above the $0.1919 support level, a base formed on October 11th that's held strong through multiple tests. This support anchors a descending triangle pattern, which is a classic technical formation that typically resolves with a breakout. The question isn't if it breaks, but which direction. Pi has bounced off that $0.1919 floor repeatedly over the past 3 weeks, forming long-tailed candles that, honestly, scream buyers are defending this level. The triangle apex is approaching, meaning volatility compression is ending soon. When triangles reach their apex, the breakout tends to be explosive. A decisive close above the center pivot point at 20 cents and 86 hundredths would confirm bullish momentum and potentially target the R1 pivot point at 22 cents and 49 hundredths. That's a quick 12% gain from current levels. Not life-changing, but it's a start. It would also signal that buyers have regained control after weeks of bearish dominance. The MACD indicator tells a more cautious story. It's trending sideways with a declining tilt below the zero line, suggesting sellers still have the edge. However, and this is important, the relative strength index is reading 41 and rising toward the midpoint. That's a spark of buying pressure igniting. When RSI climbs from oversold territory while price consolidates, it often precedes a move higher. My expert opinion? This technical setup is a powder keg. If Pi closes above 21 cents, we could see a short squeeze as bears scramble to cover, but if it breaks below 19 cents and 1900ths, all bets are off. The next stop would be 17 cents and 3200ths, aligning with the S2 pivot point. That's another 10% drop into what I'd call the capitulation zone. While the price action dominates headlines, Pi Network is quietly building. PiBridge, a project offering exclusive services to the Pi community, just unveiled peer-to-peer lending. Pioneers can now use their Pi holdings as collateral to borrow stablecoins or lend to earn yields. Your Pi doesn't have to sleep anymore, PiBridge announced. That's a clever line, and it speaks to a real problem. Illiquid assets are useless assets. If you can't borrow against your Pi or earn yield on it, it's just numbers in an app. Pi App Studio also received a major upgrade in mid-October. The AI-powered platform now makes app creation more accessible and customizable within the ecosystem. The goal? Enable users to build decentralized applications without any coding skills. That's huge. If non-technical users can build functional apps on Pi Network, the ecosystem could explode with innovation. Or, it could flood with low-quality garbage. Time will tell. Here's some legitimately good news. Pi Network announced that over 3.36 million additional pioneers have completed full KYC verification. This follows the rollout of an AI-powered verification system that performs additional checks on tentative KYC cases. According to the core team, the system enabled over 4.76 million tentatively verified users to become eligible for full approval. Why does this matter? Because KYC verification is the gateway to mainnet migration. It's the difference between holding pretend Pi in a mining app and holding actual cryptocurrency on a blockchain. Of the newly approved users, about 2.69 million have already migrated to the Pi mainnet. That's real progress. That's real decentralization happening in real time. The system uses advanced AI models and comprehensive data analysis from liveness checks and KYC applications to confirm each applicant is a real person. This upholds Pi's one person, one account policy, which prevents fraud and duplicate accounts. In a world where bots and fake users plague crypto projects, this integrity measure is critical. My take: if 3.36 million more verified users are entering the ecosystem and millions more are in the pipeline, the network effect could offset the current selling pressure. More users mean more transactions, more utility, more reasons for exchanges to list Pi, and ultimately, more price discovery. The KYC bottleneck has been Pi Network's Achilles heel for years. If they're finally solving it at scale, that's a game changer. So what's the verdict? Pi Network is caught between crisis and opportunity. Yes, the core team faces serious accusations about token dumping. Yes, the price has been obliterated, but the on-chain data shows accumulation. The technical setup is primed for a breakout. The ecosystem is expanding with lending, dApp tools, and millions of new verified users. This isn't a dead project. It's a messy, chaotic, frustrating project with potential. If you're holding Pi, buckle up. The next few weeks will determine whether this is a comeback story or a cautionary tale. Don't forget to like, subscribe, and drop a comment with your Pi price prediction. Are we heading to 10 cents or back to $3? Let me know. As always, this is not financial advice. Cryptocurrency is extremely volatile and risky. Never invest more than you can afford to lose. Do your own research, understand the projects you're investing in, and consult a financial advisor before making any investment decisions. Stay safe out there.